wonder if you could introduce basically what your investment thesis is. How do you guys invest? So that everybody in the audience can get a real quick picture of that. I can start with you. Yeah.
Hello everyone. Dragon's perspective is quite different with the other because, as you may know, we manage country funds, and that funds invest a lot on the listed stock market. So in fact, we are the second largest investor on the stock market, only behind the Vietnamese government.
Right.
So it's, but our roots were investing into private company, and we love to invest in private company. We know how to work with entrepreneurs, at least the current generation, a little bit older generation, not the younger phase I see today. When it comes to technology, we think it's very interesting, not because they are attractive investment opportunities, but we also think that some of them have the potential to change the way the financial services industry works, change the way how our company operate. So, and because of that reason, we are not just seeking for a perfect cases of investment, but we're also looking for talents and ideas that align with our visions. And not like our folks, colleagues here, as you can see with such approach, our support can be really flexible, from basically funding, of course, to sponsoring relationship and connection with their global peers, especially in the UK because we are a UK company. Yeah.
And you go for what level? You said angel as well? Or you guys go for Series A, Series B? What level do you like to invest in?
Well, we'd love to invest in a bigger company, but during the way to the destination, I would love to support them along the way. Yeah.
Okay. And David?
So hi, my name's David. Our company is called New Leaf Ventures. We're based in the Philippines. So initially we didn't have an investment thesis. We were just very opportunistic. So we created New Leaf Ventures. It's not a fund, but it was a special purpose vehicle for us to start investing in tech. So we have other businesses, and so this was the vehicle. But in the last 2.5 years, we've started refining that. And what we've really focused on is really products that our group can use and that other companies in the Philippines can use. Second is products that we think can go regional. I think it's very interesting to meet a lot of the people in Vietnam this trip. So I've been traveling a lot in the region. So we're looking for opportunities that can roll up. And we've seen that a lot of our colleagues in the States or Europe are interested in regional plays. So we're interested in supporting that. And I think third, which I think would make us a little bit unique, is we're not limited to traditional VC roles. We're willing to play what I guess some people would call more of a private equity role, which is even acquire brick and mortar or legacy systems to help our startups grow. So we're looking into all sorts of opportunities, but maybe along those three. That'd be a simple way to put it.
Okay, cool.
Hi, I am Tatiana Kim. I'm the managing partner of Tại Venture Partners. We are a seed fund, so that means that we invest at the very first rounds of the startups. It's internet and mobile technology companies focus, and primarily B2C or B2B2C, so that's the DNA of the founding partners. That's why we love this type of models. We feel the niche between the business angels and traditional VCs, so that means that our investment ticket is larger than typical individual business angels. We are more flexible than the VCs. But we can be very, very first investor with the company, even co-founding in some cases when we bring ideas and we find the entrepreneur team which has a good match with that and loves the ideas too. We would typically follow in Series A and sometimes B, but not further. Geographically, we don't have any geographical restriction. We can invest in any country of the world, but the focus is Europe and emerging markets. And the next 2 years, we really would love to focus on Southeast Asia and India. So that's why. But this is my very first day in Vietnam, the first morning. So
welcome.
I'm here to learn a lot about the country and particularly the ecosystem, startup ecosystem here. But I'm really happy to be here. So.
Okay, cool.
Hi, my name is Charles. I'm with DFJ Athena. I'm based in Korea, Seoul, Korea. The DFJ Athena Fund is largely a Series A B fund that invests in Korea, but now also China. We are trying to expand our region of investment to Southeast Asia. And in Southeast Asia, the investments would be more seed, angel stage. That would typically be for us about 100,000 to 500,000 as a seed investment. One of the things that I've seen in Korea is that the networking, I think, and the mentoring is very important. So if there's a philosophy, I think it's mainly to invest in companies that we are able to help. And that gives us a lot more confidence in the ability of that company to succeed. So in Korea, I've had good experience and success being able to leverage network from Silicon Valley, let's say, and vice versa. I think there are things in Korea that are leading, cutting edge that the Valley can learn from. And I think from Valley, there's obviously many good experiences that Korean entrepreneurs can leverage. I think that's true for Southeast Asia too, because Korea, for one, is a very important market because of mobile, because of IAP. IAP purchases, in-app purchases is very strong. But I think that as that market becomes crowded, many Korean companies are very interested in Southeast Asia. So I'm very interested to help Korean companies come here, as well as Southeast Asian companies leverage off the experience and mentoring from Korea and North Asia. Thank you.
Okay, cool.
Hi, I'm Shu Yin, and I'm a principal at Unitas Impact. And we're a venture capital firm with the dual mission of improving the livelihoods of the working poor on the one hand and generating strong financial returns for our investors. We've got a $45 million fund for Southeast Asia as well as India, and we've built up a portfolio of 8 investments across the region. I think what makes our investment thesis unique is that we're really the only venture fund focused on backing companies which improve the livelihoods of the working poor. And you might be wondering, why does that even matter? Well, actually, a lot of entrepreneurs, or many that we meet at least, are seeking mission-aligned capital and investors who really share the commitment to building a company not only with great financial returns, but also great social returns. And in almost every deal that we've seriously looked at, we've come up against kind of commercial mainstream investors, and it's exactly this interest in engaging with a mission-aligned partner which has allowed us to win in some situations. I'd also add that we've built up a lot of expertise working with companies focused on the low to middle income segments, which is not something that many investors are focused on.
Okay, cool. Can we get those mics, a few of the mics down here so we can move a little faster? Quick question for everybody on the panel. Real quick, just the number. How many investments have you guys made, have your funds made? Real quick, one by one. You can start with Shunya.
So we had 8.
8?
Yeah.
Okay. And Charles?
16 fund right now has over a dozen.
16?
Over a dozen.
Tatiana?
We have 20 companies in the portfolio, half of them in Europe and half of them in emerging markets.
20 total.
20.
20 total, half here and half in Europe.
Yes.
Right, okay. And David?
You know what? So just with New Leaf, not counting the other businesses, so maybe about 6. But 2 of them are other funds, and then we'll follow on. Yeah.
Okay, cool.
So for me, it's only startup, right?
What's that?
It's only startup, right? Not counting big funds. So we got.
Sure, you can give us both numbers.
No, both numbers. You know the number before. It's over $1 billion in assets under management. But in terms of startup company, we got 2 company, both in Thailand. Yeah.
Okay. Cool.
Seed stage, less than $1 million.
Okay. Wow. Okay. So just to kickstart into like founders, so investors are meeting a lot of founders. I'm sure you guys have met much more than you've invested in, right? And you choose a percentage of the founders that you actually meet. So what do you think of the founders that you've seen across Asia recently? Some of you guys are new to Asia. Some of you guys are also. Maybe I'll start with David since you're in the Philippines.
So I think there's a lot of interest, but I think like what Henry mentioned earlier in his speech really resonated with me, and I wish more of our founders there get a copy of that speech. So I think a lot of people are excited with the space, but they need to learn how to pay the price for it. And so, which means, be able to clarify and focus and build their character in the start. So I think there's a lot of opportunity, but very young and very raw. But I think so our job here is, where it's a bit unique is, yes, invest, but help bring out those values, help bring out the character, and help bring out the capabilities of people, help, guide them in a way without getting in the way. So I think I'm very excited about the space, but I do realize it's a very young ecosystem, and people need to grow and mature. So yeah, so excited, but with qualifications.
Right.
If they're willing to mature, we'll work with them.
I'll jump over to Charles real quick. From your impression coming from Korea into Southeast Asia, what do you see any key differences between the founders you see here and over there?
I think the ecosystem is a bit deeper in Korea, which I'm really happy to see is growing here in Southeast Asia. What that means is having a breadth of investors, and not just money, but strategic investors that can help you with your business. So I think that ecosystem is growing more in Southeast Asia. The business, recently I've been managing a mobile advertising business. And in this business, you can see the fast changes that are coming because of mobile internet. And one of the things that I see is that, the app today is the access point to mobile. And because of app distribution, there are new advertising revenue opportunities, for instance. Here, I know in Southeast Asia, through our network, people like Kakao, Line, Korean game companies spend a lot of money on advertising or user acquisition. So it's new revenue opportunities for developers in the region that I think didn't exist previously. I think also mobile is providing a very interesting and new format in advertising, which is expanding and growing and changing all the time. So, in the internet, you have to monetize by either selling content or through advertising. And I think advertising as a medium is becoming much more contextual and much more robust. So it'll be more revenue opportunities coming for the region.
So you're saying that founders here are now being opened up to those opportunities?
Well, I think it's getting easier for companies to succeed because, one, the GDP is growing in your markets. New advertisers spending money in these markets are all things that will be positive impact. And I think more and more as the ecosystem grows, you have more mentors, more other entrepreneurs who are succeeding, which all drive success. So I think those things are changing. The environment is definitely much better now.
And Tatiana, I'm curious, you're in Europe and here, so what's your what are European founders like compared to over here? They're not like the Silicon Valley founders either, right? So.
Yeah, I think there is some difference, which is explained by the maturity of the markets, right? So which is different. Europe is more mature, less mature than US, but more mature than emerging markets. Therefore, there we see more founders who are the second or third time founders, right? So they have already experience. They know well how to balance between the growth, which is very important, but also they watch carefully the unit economics, how to run on the lean organization, and the importance of the team spirit, consolidation of the team, bringing the real top experts to the team, and also surrounding themselves with the advisors, really very, very experienced guys. And so that's here. Well, I cannot speak about it. I will not speak about Vietnam because I'm yet to learn about it. But we've been looking at Southeast Asia. We started with Singapore and Indonesia, and then we look a little bit Malaysia. We're now looking at Indian markets. What we see that there are many already talented, very smart entrepreneurs and very successful ones. But if you look on the bigger scale, the founders are still very young, which is good. I mean, that they can adopt very quickly, they have bright ideas, they are open-minded, but still they have a little bit less experience. We see there's some trends, they either focus only on building the product, which is important, but it's not the only focus, the only factor to look at in the startup. They sometimes don't think about monetization, which is, of course, depending on the model, you can, at the initial, and you should at the initial phase, you focus on growth, because startups, by definition, should grow. But then you still have to be clear vision how over a certain time you will monetize and make the profit for the investors. So that's probably the biggest difference, if you want.
I think that's true. In Vietnam, we see a lot of very product-focused companies that don't have the business side down, right? Yeah. And what's your perspective on that? Do you see that as well, or?
Well, I just want to add one thing that in a couple of cases I've been involved lately, I see them really professional versus earlier years. They came to us and they really know what they want, right? They know what they're funding for, what the next product would be, so really professional.
Shuin, I'm curious from the impact investment side, how are impact founders different from, let's say, the other founders that you might meet?
Well, I mean, I think what's... is it on?
And you're very Vietnam focused, correct? Yes. There's another mic right there. You could test on that one.
Right, okay. Well, actually, I think what's interesting is that kind of the more conventional tech scene and the impact scene are beginning to overlap, not to say converge necessarily. But so I think the kind of impact-oriented founders that we're looking for actually have a lot of the same qualities as kind of the mainstream tech entrepreneur. But they also have that deep commitment to, creating impact in whatever area of passion that they have. As for Vietnam, I think, again, kind of excited, but with some qualifications. It's a bit of a hard market to get to know. It's a bit of a black box, and I think particularly if you're not based here or if you're a foreign investor, you've got to work a lot harder, I think, to really identify the opportunities. But we do believe that they are here, and there's increasingly strong founders, really interesting business models. But it's not immediately apparent in, say, the investor deck or in a pitching competition necessarily. It's really through spending time one-on-one with some of the founders that you can uncover these opportunities.
Right. I'm just curious from everybody, how many people here are founders? Raise your hand. How many people are founders? Raise your hand high. All right. Okay. How many people want to be a founder? a few people as well. Okay, cool. I'm curious from you guys, since we were talking about everybody's talking about the region. We want to get our startups to go regional. And I think one of the problems that we see in Vietnam is that a lot of startups will reach a certain threshold. They cannot either make the transition of thinking regionally, or their product is not ready, or all these kinds of issues. Their team isn't ready, they don't have the management. So what kind of things do you look for in a startup to see, okay, is this guy ready or not, or what kind of help do you give them in order for them to go regional?
So definitely we're looking for guys that can go regional. So like to your point, you said that a lot of companies feel like they're not ready, and the answer there is no one's ever really ready. And if you look at the space we're in, you're always aiming for something bigger, which like popularly known as a BHAG, a big, hairy, audacious goal. And it's a big goal if it's bigger than where you are now. You know it's hairy if it's complex. You know it's audacious if people say you're crazy and that you're attempting it. And it's a goal that you realistically put a target and say, if I hit this, then I've achieved it. You know, you put a result. So we look for people who have the courage to aim for these things. Now, of course, if their heads are in the clouds, they're not courageous, they're crazy, right? So we look for people who partner that with the work ethic and who partner that with the willingness to explore and take responsibility for their failures. So I think that's something that, you know, like, we don't really mind founders who have, like, let's say, a lot of failures in the past. There's two things I encourage a lot of entrepreneurs that we work with is that don't worry about failing. There's only two things that I want you guys to avoid. Number one is don't be dishonest. Okay, if you fail, don't make it because you were dishonest or don't make it because you were lazy. Okay, so if you work hard, okay, if you're honest, if you ask for advice, if you go travel, network, even though you're not ready to enter the market, just meet people, lay the groundwork, that's fine, we'll support that. But that's what I was saying, so maybe you're not ready, but lay the groundwork. You don't have to necessarily open an office, you know, LinkedIn, Facebook, use all of these things to your advantage, make connections. You know, people might actually be looking for your exact product. So my trips this year have been really interesting, like opportunities I didn't even know existed all of a sudden came up just because a friend of a friend of a friend, you know, knew each other. So that's actually something that many founders can enjoy now. And I think that's to the point of being ready. No one's ever really ready for anything, but make sure you take responsibility. And if you are to fail, don't make it because you were dishonest or don't make it because you were lazy. Like, work your ass off. Oh, I'm not sure if I'm allowed to say that, but, you know, work really, really hard, okay, and learn and grow.
Yeah. Tatiana, I wonder if there's any lessons from Europe. I mean, there's a lot of companies that are competing across the entire continent, right?
We actually, in terms of your question about whether the regional is important or not, so the scale is important, okay, but we don't necessarily require that the companies to be only the one, you know, the company we invest in should be, you know, going for many countries, for example, or, you know, covering the entire region. I think it depends on the model and depends on where the company is originated from. So if a country is big enough, that's fine, you know. So we don't require that you have, if you are based in Vietnam, the country is large enough, right? So, and if you can grow and build the sustainable business and big enough, in fact, we would even encourage the founders to focus first on the first country, you know, just to make sure that they achieve some success and traction in their domestic countries before they go and expand too quickly, you know, because then, you know, if the team is not prepared, if the product is not almost ready, so they not that clear in the strategy how to execute and operate, and at the same time they expand to many countries, that may be a disaster, you know, it may be start of the end. So it depends. But, you know, if comparing between the Europe and Asia, in Europe it's relatively easy to expand across Europe, and many of our portfolio companies most of them started in Germany. They would expand first to all German-speaking countries, and then they would go to UK or, you know, France or Spain or whatever, because there is not that difficult culturally to expand. Here in Asia, well, India is a separate market, of course, and it's huge enough, but Southeast Asia is, each country is very different and very specific. It's not sometimes easy to do the business transfer to the other countries. So that depends, right? But if it's originated from small country like Singapore, that's great, but of course it's not big enough for us to be attractive, so we would expect and we would invest only if we have a clear strategy that it will be regional. But if it's Vietnam or Indonesia, it could be self-sufficient in domestic market.
And Charles, I'm going into a flow here, but Charles, in Korea, I guess it's a very big market alone, right? So you wouldn't have that much incentive to leave, or?
Well, contrary to that belief, it's not. So I mentioned earlier, Korea is number 3 globally in Google Play revenues. So the amount of revenue Google generates from its Google Store, it's Japan, USA, Korea. So in that sense, there's a lot of revenue being generated, but the internet population in Korea is only about 35 million people. So that is always a limitation.
That's our smartphone population,
Yeah,
right?
so I think in that sense, there's a lot of similarities to Korea and Vietnam, which is single country market is difficult.
Right.
Now, as companies start, I think there's 2 things very important strategically. One is I've seen that you can approach a business and say, I want to be global and regional. And it's very attractive because the footprint is larger, addressable market is larger. But as Tatiana just mentioned, cultural differences are very, very different. So even Korean companies or US companies have very difficulties succeeding in markets they don't know, where particularly it's B2C. Because when you're doing B2C business, to understand the culture is much more important. So I've seen much more success with companies trying to go regional or global that are doing a B2B business, because there the translation is much easier, I think, in terms of product. So B2B businesses, I think, are ones that have a better chance to go global. But one thing I've seen in Korean companies, of course, the typical approach is win your market first. If you win your market first, then you can expand to other markets. But a very common mistake that I see is that because they focus on your market first, your tech stack, the infrastructure is not scalable. And that is always a problem, because when you find yourself in a situation where you built a great business, you're ready to go global, regional. But as people look at you, potential acquirers, partners, they look at your tech stack and your infrastructure. Did you build to scale? Are you trying to resolve, how big a data set problem are you trying to resolve? So I think the smart teams, the smart companies always make sure their technical infrastructure is very strong and can scale to anything. And if you cannot, then you always have to build from scratch again when you try to approach new markets. And that is not attractive.
I think that's also kind of the scary thing about the valley startups or unicorns that are attacking Asia and the rest of the world, right? Is that they are building for that, and then now we have to meet them on the battlefield.
Well, so I previously worked for Yahoo and Google, and I know that, for instance, in Korea, Google saw that very much to win the search battle, they have to do things the Korean way, which is in many ways manual. Koreans love to follow what everyone else searched the day before. So top 20 search result is the most popular thing the next day. So Naver, they create a manual process to make one box search result. Very attractive, but Google doesn't want to do that, because it doesn't scale. You cannot scale a business like that. So for Google, it's not important, let's say, to win Korea. Okay, you can make 3 billion or whatever, 1 billion in Korea, not important. So it creates an opportunity for local competitors, because that is an attractive business for local. So that's what I mean is, your business strategy is really different. Global, if you're targeting a big addressable market, you can make a strategy where you're just gaining market share, users, and eventually revenue will come. But in smaller markets, you cannot run that strategy, right? You have to make sure that you can verify and justify your revenue model in a smaller market. And I think that's very important. Different strategies.
Shuyan, what about, you're looking at a lot of Vietnamese-based companies, right? And eventually you want to get them out of Vietnam to make an impact in, say, Cambodia or Indonesia or wherever.
Yeah, absolutely. I mean, I think it's true. I mean, I think there's not as many, I guess, Vietnamese companies necessarily looking to go regional. The market is kind of just large enough to make it work as a one-country play. Would completely agree with. I think it does make sense to get it right in the home market first. I mean, pivoting in multiple geographies is pretty painful. But I think, localizing, trying to build a good local team in each country that you go to, and calling in favors with your investors and other partners to really build up that base and really understanding the market before you take the plunge is pretty important.
Well, I mean, when you guys look at, when all of you guys look at the company like 5, 10 years out, right? It's going to have to be raising more and more money to get bigger and bigger. They have to be able to, be able to raise, let's say, 10, 20, 30 million dollars down the line. So like, when you look at that, and especially in Southeast Asia, do you see a lot of that potential prospect, or is there like a fear, like later on, okay, no one's going to pick up my early on investments? I guess Charles, you want to address that?
So I think that's a very important difference in terms of the investment philosophy, right? I've seen many investors in Asia, seed investors in particular, that seed like crazy without support. And then they pick the ones that actually do well on their own and then support. And, I think it's more difficult. So I think it's really important that investors are there for the long run. I mean, if you invest early, you should be ready to support. And I think that's where entrepreneurs get very good value, where you have investors that are ready to support you through. So, especially for seed investors or, Series A or before, that's always a consideration, that you'll be called on for more capital. And I think you want to be comfortable investing in companies that you'd be ready to provide more capital in the future.
Okay, so David, what is it like in the Philippines in that respect?
That's definitely a concern. Like, for example, raising a Series B is hard to begin with, but raising a high Series B with that type of valuation, there's not a lot of people who can or will write that check at that valuation. So, and the people who are willing, for example, people who are interested in the region from the States, at least the guys that we know, they're looking at the region as a whole. So there's sort of that balance you have to work with, which is how do you win your home market, which I think is wise, but at the same time not become such an isolated story where the only realistic place to raise capital is within your location, and that limits your funding prospects, right, especially when you're going towards a larger round. So very difficult. One of the things that I actually think is smart that a lot of companies are doing now is they actually work with the bigger companies, for example, like a Samsung in their area, and say, I'll build the product you guys want. I'll take the risk for it, and then the investors can help carry that risk. But it gives you sort of like a pathway that allows you maybe an exit or maybe additional investment. So not a lot of guys like explore that option, but I think raising a Series B round is very, very difficult. And sometimes, especially if it's your first startup, it's good to have and know like what is it that the next guys want, right, or what's that eventual exit where maybe a listing is not necessarily the most realistic for that type of business.
Right. So they have to be thinking way out. They have to think big early.
Yeah, and I think so. It's not easy. So so we also operate companies, and it's very you have there's times where you have to keep your head down and focus on execution. But at the end of the day, as a founder, as a CEO, you need to be able to step back and say, here's the path I'm charting for a group, and you have to be realistic about it. Yes, you have to dream, but you have to say that no one's going to write me a $20-50 million check from here, and if
right,
someone is, it's probably these guys. And are there any precedents of them writing that type of check for your type of industry, for your type of business? Particularly in Southeast Asia, where it's difficult, where a lot of them don't even have profits, and a lot of the investors are a bit
right,
afraid of that.
Right.
So I think it's good to be realistic. Yeah.
Okay. I think we're almost out of time, so I have two last questions, and then one question for all of you guys. So Hugh, I want to know, I mean, you're on the tail end, right? So like, what is your perspective looking at these guys coming up? Like, are you aggressive about, looking at these companies that you would fund at a larger stage, or what's your approach there?
Well, as I mentioned earlier, because of our kind of special situation, so we look at them from the heart because we think they could be a part of it in the future. It's not really an aggressive progress to look for startup in our position, but we keep an eye open. Yeah.
Okay. So my last question for all of you guys is what top 3 things do you guys look for in founders so that these guys know what they can be or pretend to be or try to be? So I guess I can start with you here.
Well, I think I just need two things. That should be an authentic dream, and they have enough passion for the dream, yeah. And that's it. Yeah.
I think, so three things come to mind. One is hunger, or drive, as we mentioned earlier. That's super important. That it's sort of like a raw passion to get up and work really hard and achieve something. And, if you look at the literal meaning of passion, it means suffering. That's the literal definition. And so you need people who love what they're doing so much they're willing to suffer for it. And that's hard to come by. Second is they need to be competent. They have to be good at it. They can't just say, oh, I'm willing to work hard and do all these stupid things, right? And then third is they have to have the work ethic. They have to be able to, yes, they have the drive, but structure their drive into disciplined steps that actually lead to results.
Well, the first factor which is important to us is the founder has the clarity what problem he or she is solving on the market. And it's quality and quantified also vision, so what particularly you want to achieve, so that's the first thing important. Second is the founder and the team, whether we in many cases we invest where there is a founder with a co-founder, right, strong, so which are complementary to each other, or maybe 3 of them, or 4, and or there is a strong founder with consolidated team, so there's 2 or 3 team members covering different areas of expertise, so that's very important to us as a second factor. And the third one is, does the founder understand the target KPIs that they want to achieve at the next milestone? Even we know that all the speeches and business plans, they change the next day you fund, right? But and it will be revised many times. But as long as the founder knows how to measure their success and evolution of the company, so that they can also focus the team on that, and then that helps to achieve the quality execution. That's important to us as well.
Okay.
I think probably number 1 is leadership. Good companies are never one person, so a good leader is very important to attract good skills. And as Tatiana mentioned, always better to have more than one founder. I think that provides stability. The other important factor is open-mindedness. I think founders, it's very important to be able to take good advice, to be able to change when you need to. I think less than 10% of startups that succeed finish success as they expected to when they started. There's always a change. So knowing when to change and being open-minded is I think, very important as well. There was a third one, I forgot now. I can't remember what that was, but I think those 2 are pretty critical, right? Being open-minded, being flexible, having leadership, and, of course, having the passion. Things are always tough, always take longer than you expected, always takes more money than you expected, and, not letting that get you down, because it's always a tough path.
Cheyenne?
So I'd say, focus, number 1. So I think really, I think understanding not only kind of the problem that they're solving today, but where they want to be in 3 years, and being, razor sharp about a couple of, key metrics that they're really tracking, and knowing kind of this vision of the future. Honesty and kind of transparency, and just being kind of straight up with us. I think we'd rather be told that things are going wrong than just having that hidden from us and swept under the carpet. That's okay, we understand, of course things are going to go wrong, but tell us about it. And lastly, I think that, that passion, that drive that's been talked about before.
Well, cool. Thank you guys so much for your thoughts and your ideas. And I hope you invest in one of these founders that are here today. So yeah, let's give the panel a round of applause. Cool.
Thank you, guys.